Okay, folks, so we've got a lot to talk about. First, we need to talk about an update on the market and plays. Number two, I want to give clarifications on my thoughts on a specific stock that I think a lot of people misunderstood. And lastly, I want to discuss a hugely positive catalyst that just came out today for a specific stock that we really like that actually means a lot more than meets the eye. And the only thing that I ask in return for all of this is that you hit that ravishing like button and also don't forget to subscribe either. Okay, Marquetta, a little bit more risk off today, but you did see some runners. Palantir breaking into new highs finally. Upstart is continuing its relentless swallowing up of the rest of the market, getting close to $300 a share, which is insane. Make fun of me if you will, but I still can't make the numbers work for this play in order to upgrade the price target on a fundamental basis. We had a crypto cool off today, a little bit of a breathy breath. You had some growth tech up and some growth tech down. ARK was net green today, although not by much. But I want to go ahead and start with a short squeezer IRNT. So yesterday morning in the pre-market, I made the case for future runs this week on IRNT based on retail sentiment, previous patterns, and the way it blew through risk-off days. We briefed on it at about $26 yesterday morning, 30 minutes prior to market open, and because of a slew of lucky tailwinds making this projection right a lot faster than expected, well, it hit $60 this morning before having its cool-off. But I want to give a little bit of background on it. First of all, this is a serious cybersecurity company led by Keith Alexander, who is a retired 4-star general who served also as director of the NSA under Presidents Bush and Obama. Went on to become the first commander of the U.S. Cyber Command. The company also has partners all over the place with multiple foreign governments, to the U.S. Department of Defense, big players like IBM, Amazon Web Services, and Google Cloud, and they have been on the right trajectory in terms of revenue. So, not a joke company. However, since this went public via SPAC, short sellers have been trying to exploit that because, of course, SPACs have been in a relentless bear market. So, estimated short interest is continuing to go up consistently. But building on that, one of the things that I became more aware of back on the first run of IRNT on the 7th was the prospect of a gamma squeeze once this bounced back. And that's increasingly present, and it's likely becoming a self-fulfilling prophecy in the sense that the anticipation of that is driving a lot of retail buying pressure, which is making it more and more likely. Risks, well, share offering is a legitimate risk here. Rug pulls similar to the Atra situation we saw earlier this week. And overall post-rally dumps that we've seen over and over again in IRNT's past. I said, with most meme stocks seeing risk sell-offs today, I'd require this stock to show extra proof of concept in a reversal. For example, holding a support level and then bouncing several percent minimum before playing more moves. I don't think that's too much to ask. Great that so many people are interested in trading right now and retail participation is high, but one of the unintended consequences is people have this message in their head that if they're not buying and holding every damn stock that they see that's running, then they're this dirty big shill monster. Which is true, you are a dirty little monster, aren't ya? Buying and holding, trying to make monies from the markets. Disgusting, but I'd rather be disgusting than blow up on positions that quite frankly you have no business holding. The only short squeeze candidates that I have tolerance for buy and holding on is obviously Ooga Booga AMC because of what it represents and the staying power. But other than that, if you're buying and holding these things, you're asking for trouble. Okay, real estate player OPAD appeared on my radar this morning on news of expanded leverage earned with a loan and securities agreement. But the main reason that it ran today had nothing to do with that. It actually ran because of retail sentiment on foreigns. I know, shocking. Anyways, based on the performance in the morning, combined with volume and projected volume inflows, I projected that we would see wavy and inconsistent price action. We did get wavy price action, but it did hold its upward direction a little bit better than I expected. But it's running, in my view, largely because of the same reasons that IRNT is running. Potential gamma squeeze and short squeeze anticipation. One thing that you'll notice a lot of times is that the bark with these squeeze anticipatory runs is almost always better than the bite. We've seen so many times stocks run up on anticipatory short squeezes that actually never end up happening, but the actual anticipatory run to the short squeeze does happen, and you get these massive 200-300% runs. And then at the end of the day, what happens? Well, short sellers are just like, okay, well, I'm just gonna pile on more. So my thought process is that you look at the overall market environment. It seems like the less risky proposition is anticipating short squeeze anticipatory rallies than anticipating actual short squeezes. And if you can find the strongest anticipatory rallies, you may get both. Okay, moving on, BBIG staying fairly consistent at these higher levels post-momentum rally. Estimated short interest took a step back today according to Ortex, which likely helped some of its rally today if some of the weaker shorts covered. We can go into what the true short interest is on this, but it's the same story. What I will say is there's always this message when people look at short interest stocks that, oh boy, man, the shorts, those shorts have to cover. They have to cover tomorrow. But that's certainly not the case. They can defer and defer and defer. The main argument for shorts being forced to cover is if the stock goes up to a point where they get margin called, or if the cost of holding is more than the perceived benefit of holding and waiting. And that could certainly happen faster if more and more people buy these. But how do you know when more and more people are going to buy these? Otherwise, if they just stagnate at higher levels of support, what happens? Well, it becomes a waiting game where either the stock price goes down and short sellers cover, or the stock price stays up and short sellers defer. But anyways, in regards to BBIG, I think that one of the problems with this play is that its big catalyst is about a month away. Do shorts have to cover because of the distribution? No. But providing shareholder value when you have a lot of shares short on the market does create an amping up of risk profile for anybody that has borrowed shares that they've since sold, especially if that becomes a self-fulfilling prophecy pre-catalyst. People buy it because they think it's going to be a big deal and makes it a much, much bigger deal than it otherwise would have been. My projections, well, I think that largely most of the opportunities with BBIG will be again closer to its main catalyst date. I think there's a solid chance that you see more running around the mailing date and the shareholder meeting as well. Obviously, how it trades now is going to be mainly around how much it circulates in retail communities and whether that leads to more buying trampedes chasing the available float. But if you want actual pinpoints for what people are going to be watching, I would look at the catalysts and especially that last one. Okay, next. So we did see former SPRT, now GREE, showing some holding above that $40 support level that we were speculating on yesterday. We'll see if it continues. Keep in mind that short selling on SPRT has now transferred over to GREE. And if it can find some consistent level of support, which we were saying earlier this week, I think it's really likely that retail picks up on that, connects the dots, and induces a euphoria run in the future. We'll see what the data suggests, and we'll get more information when GREE's short interest comes out. That being said, I wanted to address some misconceptions on this play and read one specific comment that I feel like summed up the misconception the best. I know Charlie is against hodling through merger/catalyst because of the sell the news effect. However, I held SPRT through its merger and news release because I read on Reddit that shorts have to be covered during a merger. That is very, very wrong, and I got locked in the position. While Charlie did not explicitly say that they had to be covered, he hyped up the merger as a potential catalyst and fed into that narrative that shorts have to be covered immediately. Him saying he recommends not holding through news catalysts, him saying not to hold and hope SPRT, and then at the same time hyping up the catalyst robs us of our ability to do any DD properly. Now, I don't know about that last part, but in terms of the first couple parts, my response is we definitely had some poor messaging in regards to the coverage on SPRT pre-merger. Instead of my usual yelling that you need to be trading the play instead of letting the play trade you, I should have gone a lot more into different case scenarios and different outcomes and different action plans in regards to each outcome. But if it does show proof of concept and it does show a consistent level of support, I see that as a solid and legitimate new opportunity because stocks that have very, very high short interest and stocks that are able to show a consistent level of support tends to lure retail or whales into forcing a bounce off support. It's also true that shorts absolutely do not need to be covered into a merger. If that was the case, short sellers would have covered a long, long time ago. And otherwise, stocks like MAT, which did a merger with a very, very high short interest company, TRCH, that would have gone through the roof, right? Shorts don't have to cover because a catalyst happens, but a catalyst does create that opportunity for more risk for short sellers and more opportunity for retail traders to exploit. But anyways, reading between the lines and some of the other comments that we got on this, I think the real frustration was the way that I covered SPRT yesterday, and that was definitely a goof. On Monday this week, I explained that I had 8.9 million reasons to believe that this story isn't over yet. And I was alluding to the massive, massive short interest that does have to cover eventually. Yesterday, I hammered on the idea that we need it to find a consistent level of support. Otherwise, we should sideline the company, which is seemingly dismissive of the excitement that I had earlier in the week about the massive, massive level of short interest and the inevitability of all those short sellers having to cover down the road. I didn't mean to come across as dismissive, and I'll do a better job in the future. But at the same time, because squeezers are based around trying to predict crowd psychology and short seller reactions to it, you're dealing with fire and something that can't be an exact science. And the plan can't just be buy and hodl. You need to be able to say to yourself, I need to see proof of buying pressure. Not showing proof of concept, it could find a consistent level of support like 30-40% lower. At the end of the day, a short squeeze candidate is only as strong as its ability to get buyer interest in order to induce a short squeeze. Lucid, okay, so we got a little lucky and got ahead of the goat on this one. Yesterday, we made a video titled, This Will Happen Soon, in regards to Lucid's upcoming press conference on September 27th, where they will open their doors to the press, drive tons of media attention to the company and the Lucid Air and their production capacity, as well as hopefully answer some big questions, verify the company's specs, like their battery life, for example. And by sheer luck, Lucid got a slew of positive press coverage today as the EPA verified their mileage range per battery, 520 miles. As we were talking about from day one when the speculation on the CCIV merger started, the big deal with Lucid is that it has a few competitive specs, most notably the battery. But whether or not the estimates on these specs were correct was definitely up in the air at the time, because we've seen a lot of other EV companies that were a little optimistic on their battery life performance and a lot of other things. But now that it's confirmed, it's a whole nother story. And when you're penetrating the EV market, you have to compete on a few different levels right now, either price, design, performance, or battery life. And Lucid isn't going to be competing on price for a while. They're starting with their most expensive model. But they do have a relative edge when it comes to design, performance, and battery. In terms of design, they've taken advantage of the high likelihood that perhaps people paying top dollar for vehicles do want to have top dollar interiors. I know, shocking concept. Instead of what Tesla does, which is blah. They've also done a solid job with their exterior design, and that's certainly subjective, and we'll see how the market likes it, but reasonably trendy, I'd say. And their performance numbers match up great with the competition, only arguably underperforming the top of the Teslas, and Motor Trend backs that up as well. And now that the battery component, arguably the most important component for EVs right now in terms of competing in the market, now that that's confirmed and it's one of the most competitive, if not the most competitive out there, well, you can make a much, much stronger argument for the competitiveness of these cars. And I think there's a lot of people that are looking at Lucid and they're like, hey, you know, I saw a lot of EV companies go public and they didn't meet their promises at all. They were really sketchy. They had weird ways of getting orders. Their technology was way, way overpromised. And you're starting to see Lucid, which is going to be rolling off the lot soon. You know, a lot of these promises start lining up with the actual technology, and you're starting to think, hey, wait a second, this is actually a pretty damn good company. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our step-by-step lessons, our private chat, and of course, our daily morning briefings, well, I'll go ahead and put a link to ZipTrader you below. Coupon code FUTSTOPPER50 will get you $50 off before checkout. If you're wondering what broker to trade these stocks on, well, we like to send new traders over to Webull, and they will give you 2 free stocks when you sign up and deposit with just $5 using our link below. Anyways, that caps off the video. Have a good one, and I'll see you in the next one.